Welcome to another video of Money Minded. We are going to understand credit card. Let's go. Imagine this. You've just spotted the perfect apartment. Or maybe you've got your eyes on a new car. You're ready to take that leap. But when you apply for the loan, the bank says no. Why? Because of a number. A number you may have never thought much about, but one that controls so many financial doors. That number is your credit score. It's what lenders use to decide if you're worthy of credit. And today, I'll show you how to turn it from a barrier into your greatest ally in just a few simple steps. Stick around till the end, because this could be the key to a wealthier future. Also, if you're thinking, I don't even know what my credit score is, don't worry, you're not alone. Let's fix that too. What is a credit score? Let's start with the basics. What exactly is a credit score? Simply put, it's a three-digit number that represents your credit worthiness. It's based on your credit history, how well you've managed debt, loans, and repayments in the past. In India, this score is typically between 300 and 900, with 900 being excellent. Think of it like a financial report card, except, in this case, a bad grade could cost you thousands of rupees or even opportunities. Imagine trying to buy your first home, but being denied because of a poor credit score. That's a moment no one wants to experience. But here's the exciting part. You're not stuck with the score you have. It's totally within your control to improve it, and I'm about to show you how. Why your credit score matters. Your credit score is more than just a number. It's a passport to better financial opportunities. Whether you're applying for a loan, getting a credit card, or even securing the best interest rates, your score plays a pivotal role. A high score means you're seen as a responsible borrower, which translates to lower interest rates, higher loan amounts, and even better chances of getting approved for that dream loan. Imagine walking into a bank and being offered the lowest interest rate possible because of your excellent credit score. That's power. Alright, now that we know why it's important, you're probably wondering, what affects my score, and how can I make sure it's in top shape? Let's dive into that next. Factors that affect your credit score. Your credit score is influenced by 5 major factors: payment history, credit utilization, length of credit history, types of credit, and recent inquiries. The most important, your payment history. Later missed payments can damage your score faster than you can say overdue bill. And trust me, no one wants to be known as that person who always pays late. Missing just one payment can drop your score significantly. So staying on top of your bills is essential if you want to maintain a healthy credit profile. But what if you've already missed payments or your score isn't where you want it to be? Don't worry, there are ways to fix it fast. Let's look at some of the quickest strategies you can implement right now. How to improve your credit score quickly. Tip 1. Pay off existing debt. If you've got outstanding debt, it's time to tackle it head-on. Start by paying off high-interest loans and credit cards as fast as possible. Not only will this free up your financial burden, but it will also lower your credit utilization ratio, one of the key factors affecting your score. Just think of that feeling of freedom when you make your final payment, and watch your score rise in return. But what if you can't pay off everything right away? Don't worry, there's a workaround. Let's explore it. Tip 2. Keep your credit utilization below 30%. Even if you can't pay off all your debt immediately, keep your credit utilization low. This means only using about 30% or less of your available credit limit. For example, if you have a credit card limit of 1 lakh rupees, try to keep your balance below 30,000 rupees. Because honestly, maxing out your credit card might feel good in the moment, but your credit score? Not so much. Exceeding that 30% limit can make lenders view you as risky, which is exactly what we're trying to avoid. Okay, so you're managing your debt and keeping that utilization low. What else can you do? Let's move on to a crucial factor: your payment history. Tip 3. Always pay your bills on time. This may sound simple, but paying bills on time is one of the most effective ways to boost your credit score. Whether it's a credit card payment, loan ME, or a utility bill, late payments are one of the worst things for your score. A single missed payment can stick around on your credit report for years, making it critical to set reminders or automate your payments. And hey, we all get busy, so why not let technology handle this for you? Set it, forget it, and protect that score. Next up, a tip that might surprise you. One that you can do without spending a rupee. Curious? Tip 4. Don't apply for too many new credit cards. Here's something most people don't know. Every time you apply for a new credit card, it results in a hard inquiry on your credit report, which can temporarily lower your score. If you've applied for multiple cards in a short period of time, it could signal to lenders that you're financially desperate. Imagine needing credit in an emergency, but being denied because of too many recent applications. Not a good situation. So, if you're eyeing another credit card, think twice. There's a smarter way to build credit. Let me show you how. Tip 5. Build a long credit history. One of the most underrated factors in improving your credit score is time. The longer your credit history, the better it is for your score. That means holding on to your first credit card or loan account is a good idea, even if you don't use it much. Remember that first credit card you got for free movie tickets? Yeah, don't cancel that just yet. The longer you can show responsible credit behavior, the more trustworthy you'll appear to lenders, setting you up for long-term financial success. But that's not all. You'll also need to diversify. Let's see why. Tip Tip 6. Use different types of credit. Lenders like to see that you can manage different types of credit, like a personal loan, a credit card, and maybe even a car loan. Having a mix of credit shows you're capable of handling various financial obligations. This diversity can give your score the extra boost it needs, especially if you're working toward a major goal like buying a home or starting a business. Now that you know what a credit score is and how to improve it quickly, it's time to take action. Remember, improving your credit score doesn't happen overnight, but with these strategies, you'll be well on your way to opening up doors to better loans, lower interest rates, and more financial freedom. Imagine the day you check your credit score, and it's at an all-time high. That's the moment when financial opportunities truly start to expand. If you found this video helpful, hit the like button and subscribe for more life-changing financial tips. And for those looking to accelerate their wealth journey, check out my previous video on how to save money fast. It's packed with strategies that'll boost your savings in no time. Ready to take control of your financial future? I'll see you there. And until then, stay tuned.